Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, welcome to the show. Haven't done this for a little while. It's not through being lazy or indifferent. It's just not a lot's been happening in our portfolio except for just the ongoing management and maintenance of it. If you've been tuning into the Smart Property Investment Show for a while or smartpropertyinvestment.com.au, you'll know that one of the catalysts of us launching this brand, this platform, was to share our experience investing in property, and we've done that now for probably 5 or 6 years, and we've been on a journey investing in property from our very early days. The first couple of properties we purchased at Smart Property Investment out in the western suburbs of Sydney, we've built now on that portfolio over the years and diversified into other sort of asset classes and states, including sort of buying up blocks of units and properties which are going to give us potential to develop in the future. Now, I used to do a regular sort of property update. I've been a bit lax on it, mainly because not a lot's been going on. The most recent one I did, and go and tune into it, was with our accountant, Munzerul Khan, and we sort of had a bit of a look at just the finance of our portfolio and some of the rigour that we've been going through, or the process we're going through in terms of looking to improve the cash flow position of that portfolio. And each property in our portfolio sort of costs us sort of upwards towards $3,000 a year to hold. So if you've got one property, it's negative cash flow, which is relatively easy to maintain. But when you start sort of pushing up to sort of 18 properties, the number starts getting quite big. But that's the reality of having a larger portfolio. Now, the purpose of today is not really to go back over that. We've covered it quite considerably. We went through a process and fixed a whole bunch of interest rates. Probably half of the portfolio now have fixed interest rates. And the logic of fixing those rates were, number one, improve the interest rates and therefore improve the cash flow position. And number two, we fix the rates on properties which we do not have plans, or probably will not have plans over the next couple of years to do anything with it. Anything that we might renovate or knock down, rebuild, sell, whatever, we left it variable because that gives those positions to do so. Go and tune in, listen to it, or read the articles online, smartpropertyinvestment.com.au. If you've got any questions, come and have a chat to me. I'm happy to field anything at all about what we're doing in that regards around our portfolio and portfolio cash flow management. But I thought today I'd revisit the portfolio update, and I'll get back into the rigour of doing this more often because things are starting to change in property and property investment. I think there's been a lot of uncertainty around what may happen should there be a government change. We now know that there is not going to be a government change, and the coalition has another three odd years in government. Whether that goes into 2 terms, no one knows. But we can now approach property investment with a little bit more certainty, knowing what the political situation is and how that might shape our strategy moving forward. We're working through that right now with the people who we lean on to help shape our approach to property investment. But what I'm going to do today is just have a bit of a conversation with my buyer's agent, Steve Waters. He's from the Right Property Group. You've probably heard him before. He's been on many of these podcasts, just talking about the process of owning a property and some of the hassles of a portfolio that, even though you might not want to have to deal with it, you do. And this is just the nuts and bolts, meat and potatoes, portfolio management. And I just wanted to share some of the situations we're in right now and some of the headaches we've got. Steve, how you going, mate?
Going well. Good to be back.
It is good to be back. And we used to do a lot of these when we're buying a lot of stuff, and we haven't really bought much stuff recently. And we've spoken about that in the past, so I don't want to sort of revisit that right now. And, we're obviously chatting now about what's next for us and what our strategy is. And we're pretty excited about pockets of the Sydney market, pockets of the Melbourne market, as the economics around property is starting to sort of shift, and there may be some buying opportunities sort of coming down the line. But before we come on air, we were sort of just chatting like we do. We probably chat at least weekly, I imagine, maybe a couple of times a week, just on, I'm going to call it the crap that we've got to deal with in our portfolio. And one thing in particular, and I just wanted to use this as a bit of a case study. It's irrelevant what we need to do, but the case study being, you got to keep on top of stuff, and if you don't, the issues associated with it, whether it's cash flow issues or wider issues. And we've got a property, and we've done a fair bit on it over the years. We did a big reno on it once upon a time up in Berkeley Vale, which is a suburb on the Central Coast, not too far from Tug. We're about 15 minutes from the entrance, to give people, if they know where that is. So it's not on the water or anything. It's not far from the water. And this is a property that is it was a 2-bedroom house upstairs with a downstairs sort of,
we'll call it a breakout area,
which we transformed into a 3-bedroom house upstairs and a proper sort of studio apartment downstairs. Great reno, going over it was really good. We manufactured quite a lot of equity out of it. It's been really good. We tarred up the lawns. We moved a whole bunch of stuff, and we've had a tenant in there now for same tenant for at least 3-4 years. Maybe longer.
Yeah.
So he's been a good tenant. The challenge we have though is that the driveway's in a bit of a mess, and the tenant's sort of starting to complain to the property manager. The property manager's complaining to me. I'm complaining that I don't have enough time to look after it. Telling the property manager to fix it, and the property manager telling me this is what you need to do to fix it, and me saying I don't want to spend that much money fixing and putting a whole new driveway down. So this is our most recent conversation, but I think this is a good case study because you have a responsibility owning property. Number one, to yourself, to make sure that the asset is performing as well as possible, and number two, you need to make sure that the asset that you have is a good living environment for the tenant. So you're up there the other day. I said, "Oh, mate, look, if you're up in the Central Coast, you might have a look at this driveway, and your recommendation is I've got to get this thing fixed."
It is.
There's a lot of moving parts with this, but it's a headache I don't want to deal with.
Well, you have to. And this is part of property. There is always going to be maintenance and repairs, and I refer to it as seasons. You might go a couple of years without having to do anything to any property, and then all of a sudden it just happens at once, and you're probably experiencing that now.
Yeah.
And this particular property, whilst you've had a great tenant in it for forever, which provided consistent cash flow, and the tenant's still there and they want to stay because it's great exposure for them and what have you, there is some repairs and maintenance, particularly the driveway, that we need to do, and that will provide. We'll do two things. One, it'll take cash from your pocket for sure, and I know you don't like that, but what it'll also do is it'll provide consistency and cash flow on the other side of the coin, because the tenant will stay there. You'll have a happy tenant. And this isn't a want, this is a need.
So why is it a need?
Well, because it'll progressively get worse. And as it gets worse, the damage that it could potentially do to other components of the building will cost you more in the long run. Is point one. Point two is there perhaps is potentially some trip hazards around it. And you don't want people hurting themselves, and you certainly don't want to wear the effects of that either. So as a landlord, everybody, you never want to be a slumlord, first and foremost. That's just not cool. And secondly, sometimes maintenance isn't, you need to classify it as preventative maintenance as well. So it'll cost you a little bit now, but it'll save you more in the long run.
So when you're doing repairs and maintenance, and everyone will need to do it at the point in time, sometimes it might be a massive emergency. Your hot water system is blown up and there's no hot water, and therefore you need to get it fixed straight away.
Yep.
Repairs and maintenance. But then there is preventative maintenance, and that might be trimming trees or cutting down trees if they are dead, dying, might fall on the house. So these are decisions you need to make. Now, how do you know about this stuff? Because I choose to use a property manager to manage all of our properties. I don't even know who the property manager, I don't even know their name, right? Probably should, but I don't. And so I'd probably have to, it'd take me a little while to find out who I needed to call, right? I go through them. The problem is I go, who is that person? I got no idea. Can't remember.
Well, when you get to
a portfolio,
when you get to a portfolio of that size, perhaps names aren't important.
But I'd like to think that the property manager is looking after my best interests and making sure that this property that I've given to the manager is effectively managed. Now, what does effectively managed mean? It means that people pay the rent on time. I receive that money in my bank account. The tenant is as happy as possible and as sticky as possible. And number three, that the managing agent is in touch with the market enough to help me get more out of that asset. And that might be, Phil, your rent's probably a bit high compared to the market. If you want to keep this person, maybe drop it a little bit. Or things have changed a lot, Phil. Let's up your rent 10, 20, 30 bucks a week. And, I think about this particular property and my relationship with that property management. Don't have a relationship.
And there is none.
I don't think they do a particularly good job to me. And when I do have engagement with them, it feels a bit one-sided, that they're more pro-tenant than pro-landlord.
And there's the gold. I think as landlords, you really do need to have a relationship with the right property manager that perhaps is looking at it from a dollars and cents point of view. So you mentioned a point there saying, well, let's just put it up $20 a week or $10 a week because we're perhaps $10 a week off market. But on the surface, that might be an extra $500 a year to you, but there's always a consequence to that as well. And that might be something as simple as the tenant moves because they don't want to pay it. So there's a couple of weeks vacancy, agent takes the first week's rent, and suddenly you're $1,500 in the hole. That's a lot of 10 weeks to catch up. So the consistency of cash flow is not often thought about from a property manager's point of view. And I'm being general. Of course, there's some great property managers out there. So this is where, as a landlord, it pays dividends to actually manage your managers. Now, if you don't have the time to do it, you need to perhaps outsource that, or at the very least, analyze data on a monthly basis of your portfolio.
And this is one of the shortcomings I have with our portfolio, is that I probably don't give it the level of attention I should at an administrative level. And I sort of ebb and flow on it. I'll go through sort of peaks and troughs on it where I do a lot of it and then I go, okay, that's done. But you can't. It's never just done. You know, it's ongoing maintenance of the administration of your portfolio, as it is the ongoing maintenance and repairs of your properties. So this particular property, so it looks like your recommendation. You've gone out and look at it. You sent me a video. The driveway's bit sort of, how's your father? You know, and you reckon I'd just rip it up and put down a new one. But
there's a few other sort of key components there, and it'd pay dividends actually for whoever is listening to go back to the website and have a look at the video, because there's some great before and afters and what have you. But there was a tree there that the agent missed a mark here that could have potentially saved you, multiple thousands of dollars. Probably 4 or 5 years ago, there was a storm, a tree fell over, it fell on another tree, and long story short, that's probably the reason why the driveway needs replacing today, because when the tenants first moved in, the driveway was perfect. The trees have fallen over, the roots have subsequently emerged from the ground as the tree fell over, and that's called the cement slabs to lift. What we have now is probably expenditure in the circa $10,000 or thereabouts to actually now make this not just safe, but also give you longevity so that you're not coming back to it. Because we could take a shortcut and perhaps, without getting too technical, put a hot mix over it, or a sand cement slurry over certain parts of it, and that may last 3 years, it may last 3 days, and then you'll just throw good money after bad. So this comes back to the point, well, sometimes it's preventative maintenance. You may as well suffer the capital loss potentially now in terms of expenditure, but it will pay dividends for you over a period of time.
So how do you work that balance out of, I'll just do a half-assed job and fix it for a year or two, versus I'll do something, and if you put a new concrete driveway down, you expect to get 20 years out of it, right? And some.
Yeah, and so, as long as it's done properly. But how do you work it out? I think that really comes down to, and every landlord is different. I think it comes down to the capital that you have around you at that time, and what the plan perhaps is for the capital. So if you haven't got it, well, you haven't got it. So you'd have to make do and perhaps do a shortcut job.
I call it a half-assed job.
But, I was looking for something. But, if you have the capital around you and, it hasn't been sort of parked specifically to go elsewhere, well, then you should do it. But once again, we need to identify the difference between what is a necessity and a safety issue, versus perhaps something that we can put off.
So the cosmetic appeal of what we do, does it really matter that much?
Not at this point in time, because you have a tenant. We don't plan to go back to it and have the bank revalue. So it doesn't have to be like it was a day after renovation.
So on that basis then, can I just get a couple of backpackers to come in with a couple of jackhammers, break it all up, then just throw down some gravel, and there you go?
Look, Short answer is no, because there's a really good chance they won't have insurance. But on a serious note, you need to be careful of who you employ as your tradesman.
So qualified licensed tradesman.
Insured tradesman. And in fact, if you're usually going through a property manager that will organise the repairs and maintenance for you, they should actually only be dealing, and most do, with tradesmen that they hold their insurance.
Yeah.
So that gives you as a landlord protection. But if you're outsourcing via the property manager, which a lot of us do because we don't like the quotes that the property manager get us, one of the questions you should always be asking is, are you insured, and can I actually have a copy of it?
So, but it's quite sort of really down to detail, but getting someone in, removing a driveway, putting down gravel or whatever, it's on a hill, it's on a slope, and now you think, well, maintenance of a new concrete driveway is pretty easy. You put gravel down, weeds are going to grow through it pretty quickly. It's going to look pretty crap.
It's going to wash away.
People are going to do burnouts on it. It's going to look tardy.
Yeah.
It's going to look tardy. But that might be a $2,000 solution rather than a $10,000 solution. So
it'll be a $2,000 solution 3 times over. Again,
the point.
and again, and again.
So you're always going to have to be topping up with more gravel.
Correct.
Yeah. So who's supposed to tell you what to do? Like, if you don't have a Steve Waters, which I'm sort of saying, hey, what do I do? Because you know what you're doing. I'd like to think you do. But if you're just taking your lead from a property manager, like, do they know about these things? Should there be an expectation the property manager goes, you know what, there's option A, option B, option C. I would choose this option for this particular reason, and this is what it's going to do. Is that a decision at the
Look, it's a hard one. It's a hard one. You would hope that the property manager will steer you in the right direction, but we need to understand that property management is the hardest job in the world, and a big portion of their workload is actually repairs and maintenance and organising quotes. And so the easiest way to get that workload off their desk is to get you as a landlord to just say, yes, accept the quote, move on, let's get it done, without too much interaction. Now, I'm being very general because there are some awesome property managers out there, and there's some crap ones as well. So building that relationship with the property manager is vital, and that's if you can and you have the ability to. Otherwise, outsource, as we talked about before. But communicating with them, and I don't think you can come across as a fool either, like, because property managers want to get the work off their desk.
So pushback, challenge.
Yeah, don't be afraid to push back, but you need to be, well, you need to start as you mean to continue. So when you first engage the property manager, read their agency agreement very, very carefully, because in the fine detail, some agency agreements will say, well, they're going to charge you for quotes. First one's free, second one costs. Right. Some property managers will charge you to organise the work as well.
Which, you know what, can be quite time consuming. I don't particularly have a problem with
nor do I, but you need to know.
You need to know about it. Yeah, so it should be disclosed.
You need to, well, it will be, but you just often glance over, the fine print. Yeah. It's very easy to do. And also, just make sure that, look, very rarely will I actually just say yes to the first quote. So I like to outsource the quotes personally, but I also know what things cost. And as an investor, because you have got millions of dollars on the line, whether, you could be a dentist, you should have some sort of awareness on what things should cost around your portfolio. How much is a plumber an hour? So
what's your smell test then? You've been doing this for so long, you probably don't even think about it. When you get a quote, you sort of know pretty much straight away yes or no, right? Is there much that you sort of go, I don't really know much about this?
No, I always ask for more evidence, because usually what happens is when the agent or when the property manager contacts you, there's very little supporting information with it. There might be a couple of photos, and so I will ask for a hell of a lot more photos. If I can, I want a really clear video off their iPhone or something like that. But I am in a fortunate position where my properties are. I've always got one of our team members there that can always just duck in,
check
it out as well.
So I've got to do something about this driveway. What am I going to do about it? What's the way forward?
Well, I remember years ago, when we were talking about sweat equity, and you said, I love that.
Yeah.
So
this is before I had children and was married, right?
I reckon
a lot more time on my hands.
You could save yourself a fortune and get a jackhammer and jack the driveway up.
You know what? Back in the day, I probably would.
You would have, but you're not now. No. So I think the next steps here is
uninsured, obviously.
In thongs. It's I think there's a video up there of you somewhere. Actually, we do have a video of you vacuuming.
You sent me that the other day, didn't you?
I did.
And you know what my point was? And I'm happy you stick it up online. I don't really care. But if you watch that, you're going to go, Phil Tarrant has definitely vacuumed before, because I have good vacuuming stance, and my vacuuming style shows me a guy like what's really funny, and do this as an experiment with anyone right? Give them a broom and ask them to sweep, and you'll soon work out pretty quickly how many people have done a lot of sweeping before and how many people haven't done a lot of sweeping. You tell instantly.
I might do that.
Yeah.
But I will put that up.
It's a real good test for people.
I will put that up online, because even though we say it in jest, that was a renovation. What was it? It was a 2-bedroom unit, completely made brand new in 3 days.
3 days, yeah.
And
in Mount Druitt, just opposite the Westfields there. And Luxford Road.
But you were a part of that, coming back to the sweat equity point, even if it was that the back end just vacuuming. But anyway, look, whilst I'm a fan of sweat equity, you've also just got to look at the economics around, and is it worth you actually doing it? So what will we do with this? We'll probably get 3 or 4 quotes, because it is going to be such a big spend. You don't want to have just 2 quotes, and we'll try and manipulate the plan of the driveway so that we can make it as cheap as possible, maybe shave a bit off here and there in terms of the amount of concrete. And that way it's parked out of the way for the next 20 years.
Yeah. So as part of this project, this has been going off about, 3 weeks or so, 2 weeks. I thought, look, the easy way to do it is just get some asphalt bloke in, just to throw some asphalt down and just do the half-assed job, right? Fix it for a little while, and worry about it again in a couple of years' time. The challenge you have with that sort of stuff, which I found out, is that little crappy jobs like that, no one wants to do it.
There's not enough money in it.
There's not enough money in it.
Yeah.
Like even me going, look, mate, just on the way home from wherever you are, and you got some spare
Couple of
asphalt,
shovelfuls, you'll be
couple of
right.
shovels full. Pack it down with your boot. She'll be right. Yeah. You think it's impossible to get. It's like tradies. Tradies these days, they're so busy, and I'd say some of them also pretty disorganised, but they're so busy that little jobs like that, you can't get traders to do it.
No.
It's impossible to do it. So you either got to do it yourself, get a mate to do it that you know, or do it properly. Now, I reckon if we go down a path of getting 3 or 4 quotes on a new driveway, you probably get a few tradies out of the woodwork because they can make a good earn off it.
Yeah.
So
it's a big
it's
job.
best to do it properly, because if you do it half-assed, you get a half-assed job, you get a half-assed service.
And especially with something like concrete, where it can go terribly wrong for you very quickly. In fact, we had a client that similar thing, had a driveway that needed to be redone on a property we bought them that was going to be subdivided. And do you remember those Irish guys that were getting around that were scammers?
Yeah.
Well, it turned out to be them.
Oh, okay.
This is up in Queensland, and we did all the checks and measures, or they did all the checks and measures, asked for the insurance, had it all there, but it was just all fake. And they did half a job and never to be seen again.
This happens all the time, where they go and say, I'll point your roof, or...
Oh, they wanted to upsell,
Yeah.
But we just said, well, the client just said, stick to the driveway. Anyway, it was something like a $15,000 job, and luckily they didn't pay, all up front, which is, tip number one, never sort of prepay, just pay as you go. But they took off with a bit of money, and that was it.
By the way, I'll do a preamble. That was just one very small incident of some scammers doing that.
It's not general.
There's some very, very good Irish tradesmen around. I'll make that clear.
No, there are. Yeah, thanks for the save.
Yeah.
No, there
we
are.
might have edited that one out, eh? But
but the point is, you always need to be sure, because you are dealing with millions of dollars worth of asset here that could actually turn and bite you pretty hard if you don't do it properly to begin with. That means adequately insured tradesmen. That means doing the job properly. And there's a time to take a shortcut, and there's a time not to.
And so this is not a time to make a shortcut yet.
Not on a big job like this. Because once again, you mentioned earlier on, do we need to have the house at a point of looking good enough to be valued? We don't need to do that. It's been there, done that. We don't want to keep dipping into
I
it.
think this is one of the ones we fix the interest rates on.
And so therefore you're kind of stuck.
Yeah.
But a driveway will look good for 20, 30 years. If it's done properly, you just need to sweep it and clean it, and then away you go.
All right. So this is the problems we're dealing with our portfolio. I'm trying to think. There's another one that we've got right now. Something you helped me out with is our property up in Kingston.
Storm damage. Yeah,
Storm damage.
The ceiling downstairs.
See, this is another thing. What's going on? What's going on with that? That's been untenanted now for.
Well, see, that's another good example, because
someone moved out, and then we had a new tenant that moved. The day they moved in, storm damage, and they went, "No, we're not moving
out."
in."
And so now it's a matter of trying to get tradesmen in such a busy time of the year. And this is, let's talk about New South Wales, which is on the back end of a construction boom, or Sydney in particular, and you've got Queensland, where every tradie is so busy. Trying to get a tradie in to do a maintenance job is impossible, and so that stacks time. So we're almost at the end of that one, but that comes back to the point. You are having a season of repairs and maintenance.
Have we sorted quotes out for that yet?
Yeah, we'll be talking about that straight after this podcast.
Oh, really?
Yeah.
Okay. So you're going to say I need more money. More money.
It's not. No, I never say that.
No.
I'm saying don't spend it. Don't spend it. You just want to throw it around.
So it's a reasonable solution you've got for me, though. Maybe we can cover it next time we're together.
A reasonable solution.
You got some photos of that property, don't we, up in Kingston, where we have this problem.
Storm damage?
Yeah, storm damage stuff.
Yeah, we have it there
let's
somewhere.
Stick it up, I think, up online, smartpropertyinvestment.com.au. It's because a couple of scenarios available to us to try and rectify that. And this is work that we sort of did about a year ago. Version 2.
Version 2. And
that probably by and large has been a real headache the whole time.
And you will get that. And like, if I look into my own portfolio, I have a property that is just recently, over the last 12 months, given me nothing but grief. Now, admittedly, I've owned it since 2003, and it's done very well for me. But at the moment, it's just psychologically killing me, because it's what I don't think I've had a full rent check for the last sort of 4 months.
Gets that way, doesn't it? This is your season of discontent.
Well, it is. And I think that's the point. As an investor, you need to plan for that. Don't think that you're going to buy a property and never get any maintenance and repairs, and you're never going to have any heartache. It does happen. It will happen. And you need to be sufficiently prepared for that via your different cash flow and capital buffers.
I think we did a scenario recently when we were doing some cash flow forecasting on the smart property portfolio. I think about $2,000 a year, I think, per property for repairs and maintenance is pretty much what we've got.
I think if you in your
benchmarked,
in your scenario, it probably would be, because we've had some where we've done bigger renovations and you've got
some
a block of units in there,
and
then that sort of condenses or magnifies perhaps the repairs and maintenance, because it's not one property, it's 6 front doors.
Well, that particular property was, some of the costs associated was removing graffiti that someone graffitied the unit block with, right?
I think they knew it was yours.
You reckon?
No.
Yeah. So, and you can't claim that stuff in insurance. Maybe you can.
I don't know.
We should try.
Did you try?
No.
Well, actually, and now coming back to this particular Central Coast property about insurance, there was that split second of moment in time 3 or 4 years ago where this potentially could have been covered by insurance, but because the property manager didn't make you aware of it at the time, that opportunity's gone.
And this other property we're talking about in Kingston, which is in Loganshire in Brizzy. We're going to try and do insurance for that. Is that the idea? Can we actually get that through?
I think your property manager is going through that at the moment.
Yeah.
But insurance, and I'm not I don't want to be too negative around insurers. It's always a hard task.
Yeah, they'd rather not pay out than pay out.
Yeah.
It's the nature of insurers.
It is. And so the agent will do their best. They'll compile a case, they'll put it forward, and then there'll be a yes or no, and then if there's a no, we'll go argy-bargy and see where it takes us from there.
So this is where we're at the portfolio. So I rather these property update podcasts to be more about proactive stuff and all the exciting stuff around property and what we're going to do next and what the strategy is and better cash flow management and all that sort of stuff. But this is the reality of having a portfolio. And
it's not passive.
It's not passive.
And
if you end up with a lot of properties, that means you end up with a lot more problems.
Potential. Well, yes. There's no potential.
Yeah.
You will always be.
It might not be one for one, but but
it's the truth.
The aggregate issues that you have is a lot more considerable.
Issues. I like that. But this is where I kind of sort of get on my soapbox about this whole passive scenario around property.
Set and forget.
Set and forget. It's a passive vehicle for you, and it is not. And if you are not connected with your portfolio consistently, you will lose money.
And that's what it's all about. Not losing money and buying the right stuff that goes up in value. I reckon we've done pretty well on the buying the right stuff at the right time so it goes up in value. We've had great growth in our portfolio. You can go and check it out again online at smartpropertyinvestment.com.au. One of the shortcomings of our portfolio is that if we're a bit better at what we're doing, we'll probably save ourselves a few more bucks. But you know what? This is the reality of what we do.
This is why there's a podcast.
This is why there's a podcast. But, I'm sort of hypercritical of how I do this sort of stuff, and it's important to be that. You got to have good oversight on yourself and how you're how you got to measure yourself or mark yourself on how well you're delivering on your own portfolio. And if you're not doing very well, you can fix it, or you can outsource it, or you can sell everything and
go into something that perhaps is passive, like a share or something like that.
Yeah.
But I think those moments when you reflect on the portfolio is usually around the time you sit with your accountant and you look at the numbers.
And get angry.
And you get angry and you think, I should have done this, I should have done that, or whatever it may be. But people haven't got into it then with their eyes wide open, knowing that this is not just going to be this money-making, generating machine. There are going to be ups and downs and sideways, as there is with any business, because every property is its own unique business, and therefore your portfolios. And you just got to suck it up.
And if you don't want to be in that, don't get into it, because this is property investment. This is real stuff, right? This is not the get rich quick scheme. It's not what you normally hear about property investment. Is all the good stuff about property investment. And I'm not saying that there's repairs and maintenance issues.
Yeah, there's a hell of a lot of good stuff.
There's a lot of good stuff, and I'm not saying this is bad stuff, but it's just stuff.
It's just painful.
It's just stuff that you got to do. But all right, good one, Steve. So we ran through a couple of our properties there. We've run through the issues we currently have in this property in Burkett Vale, up on the Central Coast of New South Wales. We spoke really briefly about a property we have in Kingston, which is in the Loganshire. And you know what? There's nothing really that's a screaming issue across the other properties that we have right now. We spoke about a bit of graffiti on a unit block we got up in Launton, which is near the new Sunshine Coast University campus. It's going to be a good asset. But, everything else is sort of
the biggest problem. Right. Yeah, I think the biggest challenge, not problem, that you have and a lot of investors hopefully do as well is, well, we have so many different directions we could go. And that in itself gives you decision fatigue. So if we look at your portfolio, there's a couple of properties there where we could put other streams of income on them. But, just even looking at your facial expressions now, it's like, oh, way too much hard work. But at the end of the day, there is an opportunity there, and some investors just have those opportunities and they don't know how to perhaps capitalise on them or pull the trigger, and some wish they'd had that problem. Yeah.
Good problems to have, and this is all about buying sort of assets which give you upside potential you can use in the future, or you can exercise that potential in the future. And if you don't, that's fine. If you do, cool. And I think cycles in terms of your energy and efforts towards your portfolios probably runs in like seasons you have in terms of stuff always seems to go wrong straight away, and then sometimes you're sort of plain sailing. So whether or not I'm thinking about a couple of properties in particular where we could chuck some granny flats on and improve the cash position, all that sort of stuff. But I sit there and go, I haven't got the mental bandwidth to even think about it. I'm okay just to suck it up at the moment.
And these are the conversations we have all the time.
Yeah.
But it's we also constantly looking at the cash flow position, and whilst the portfolio is negative, as all are, or most are, we have the opportunity to go some way to correcting that. It just now becomes down to the want.
It does, and also if you have a smaller portfolio, it's a lot easier to impact its cash position. If you have a larger portfolio, it's a lot more difficult to impact its cash position. So if I add another $1,000 a week income to our portfolio, it's going to be very, very hard to do that. Very hard to do.
To adjust the overall position?
To adjust the overall position.
No, but if you combine that with what you've done now with the interest rates or the mortgage rates and fix some and reduce the costs significantly there, then we have two streams of income that have been affected in the positive.
You just got to do the sums, have the time to do it. A bit like chucking a granny flat on, trying to get another couple of $100 a week somewhere. Yeah.
And for some people, that means
that can make a difference between a negative and a positive portfolio. So I don't want to, you need to be doing this. It's just that if you've got more properties, it just becomes a lot more complicated. But it still should be simple, right? You should view each property individually, but then all your properties as a whole. And that's a good way to approach a portfolio when you're building the up. But Steve, mate, thank you for coming in. I think there's been just a really sort of, this is it. This is property investment. This is the way it works, and it's not all sunshine and lollipops. It's a lot of it is just hard graft and good administration, good communication, good connectivity with the people that you use to support your portfolio. And if you haven't got the appetite for it, do it. If you don't have the appetite to do it, learn how to do it, outsource it, or find yourself in a
another vehicle.
Position. Yeah. Nice one. Thanks. Anything to add? Life's good for Steve, is it?
Life's good for Steve. No, everything is awesome. Obviously there's been some major changes in the last week, probably the biggest week in property for a long time.
Yeah.
And we'll see how that pans out.
Raffles. All right. Well, let's get back into doing these sort of more regularly. If you like these things, and I'm happy to go as micro as you want. With these portfolio updates. That's the Smart Property Investment portfolio updates that we do. We used to do them monthly, and I'd like to do them monthly. And if you like us talking about this stuff, the real sort of brass tacks of investing in property, happy to do so. You can email the team here, editor@smartpropertyinvestment.com.au. Tell us what you want. Tell us what you'd like to cover. Any particular themes, issues, concerns, insights, observations of our portfolio. Happy to answer anything you want. Jump online, smartpropertyinvestment.com.au, and just go to our portfolio tab. You'll check it all out and get all the stories over the many, many years of what we've been doing. There's a lot of podcasts around this, and we'll keep doing a lot more of this in the future. Steve, thanks again for your time. And
no problems.
We'll be chatting no doubt offline around the nitty-gritties of
how much money are you going to spend?
How much concrete I need.
That's it.
If you're a cheap concreter, give me a call,
And insured.
Definitely insured. And I need to have Rio steel in there as well, right? Just don't chuck the concrete down. But you know what? You need to know also what the tradies are doing, because a lot of people do maybe not the best job. So, a concrete slab without Rio in it that's driven on every day is going to crack pretty much straight away, right?
Immediately.
Yeah. There you go. So you know if you had a good job or not. Anyway, thanks for tuning in, everyone. Remember, smartpropertyinvestment.com.au. If you like what we're doing with this podcast, remember to click the subscribe button wherever you are listening to it. Also, comments or reviews. We really do like them. There's a whole bunch of people here involved in producing this podcast. It's just not me behind the microphone. So the guys and girls get a real kick out of seeing those 5-star reviews coming on and comments around it. So they'll keep at it and keep trying to improve this podcast moving forward. But, you know, we're always happy to shift and change it in line with the needs of you. So get in touch. Let us know what's going on. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.